Hey everyone, Chartographer here. In my last update, I made the case that we likely bottom out in early March. To me, it looks like we officially moved out of the down phase and into accumulation. Basically, we're building the floor now so we can move into a real bull phase in the back half of the year. Let's look at the board. I'm pulling up the same data I used in the last video, the big picture stuff. Remember that $15 billion support line in USDM open interest I mentioned? That's the line in the sand. The good news is, the market is still respecting it. Even with Bitcoin sliding from 75k back to 68k, OI didn't collapse. It's just ranging comfortably above $16 billion. High time frame wise, nothing's changed. I'm still standing on my original thesis. Alright now, I know some of you are sweating that 7k drop, right? You're probably asking, why are we dumb when things were looking so good? And what's the play now? I get it, and honestly, it's funny watching the bears crawl out of the woodwork to say, I told you so, every time we have the red candle. Let me simplify what actually happened here and using the same data we've been tracking. Short answer, on the lower time frames, the perp market got a little too horny too early. Look at the price action. Bitcoin just playing inside a range from 64k to 74k. That's textbook accumulation. It's choppy, sideways movement. While spot CBD and coin and market were basically flat, meaning the smart money wasn't expecting the breakout yet, the USDM guys were chasing very local pump. On March 4th, we hit 74k. OI spiked to $18 billion. CBD is trending up. On March 17th, we hit 75k. OI hits $18 billion again. CBD is still trending up. Hit the same trap twice. The move-up is driven entirely by people over leveraging longs, trying to front-run the moon mission. In a range-bound market, those players are just liquidity. They're going to keep getting wins while Bitcoin does its own things. Moving forward, expect more of the same. We'll likely range a bit more, sweep some lows to clear out the late longs, and then move. My rule of thumb, don't buy when USDM OI is locally horny. Wait for the flush, be patient, and accumulate. NFA of course. Okay, let's pivot. I want to share something that is a total game changer if you use it right. Think about it. What actually separates a pro from a retail trader who gets wiped out? It's emotions. The market is literally built to exploit your fear and your greed. That's why I lean on the Fear and Greed Index F&G. It's an easy way to quantify the vibes of the retail crowd. The scale of the index is 0 to 100. Below 25 is extreme fear. This is where opportunity is. Above 75 is extreme greed. This is where you should be cautious. Here's a specialist secret. Look for a prolonged periods of extreme fear, not just a one-day dip, but a weeks or months. If you look at the price history, here, those long stretches of fear almost always mark the macro bottom. The market is just a tool to transfer wealth from the emotional to the calculated. That's why I check this index to see if the price move is a real move or just a fake out driven by retail panic. But F&G alone isn't enough. You need to pair with the hard capital flows, specifically UST dominance. We'll talk about Bitcoin dominance in the next video, but USDT dominance is the one you need to watch daily. Where it goes up, people are selling assets for cash, and where it goes down, cash is flowing into Bitcoin and alts. Over the last 4 years, USDTD has lived in a very specific range. 8% is where the hard ceiling, 6% is the midpoint pivot zone, 4% is the floor. Right now, we've got the perfect storm. The F&G index has been in the extreme fear for 5 months straight, since November 2025. At the same time, USDT dominance just tapped that 8% ceiling and is starting to roll over. This confirms my bias. Bitcoin has likely bottomed. We're in the boring sideways accumulation phase before the real move starts later in this year. Stay patient, don't chase the noise. I'll see you in the next one.